Okay, we're producing that previous snippet back to this trade. This looks like an area of conversion. Now, I'm not certain, I haven't seen or been looking for that specific characteristic um, that I can remember, but that's a pretty big block of activity. Um, the question is, if it's conversion, the retracement now, of course, should break up. The next stopping point is the gap closed at 79, almost 10 points above us. Um, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 prices where there was significant trade, and the delta is way up there, 19. So I've changed my mind now. I'm looking to get back in. We're above value on a retracement to get long. Now, so far, I've only retraced to 64.75. If we got down to the 63s, that would be a nice area to, well, it wouldn't be the best area. I'm looking now at a retracement on the largest chart. We could get back down to the volume cluster at 60, but boy, that you'd have to be really patient. So that's what I'm going to do. I'm going to try to be patient and let the H period come back down and test the consolidation volume cluster, which is anywhere around the 60, 61, 61, 60, 50 area. See if we can't get a test down a little bit and pick a couple positions up. I'd even be willing to pick them up in the 62s. We'll wait for the 62s. If we can get them at the 62s, we'll go long. We see some cross trade down here in the 64s. I was looking to get down to the 62s. Is this the max retracement? We haven't had much of a retracement on the last two big pushes up. We'll see if they continually hit the bid here. If not, maybe 64 is what they're offering. See that cross trade building. Building positive delta. We're going to take the 64.75s long, 264.75. $3,600 now at 1,400. Pullback columns neutral, was positive when we got into the 64.75s. We are actually broken out of the 5-day distribution. I think the upper limit was 61.50 was the upper limit. So we are actually above the breakout area. Now, typically, if 61.50 was the limit, you take the octant of the range and use that as risk for a retracement back into the balanced area. All right, now we're underwater a little bit. 64.75 is our entry. We don't want to. The I period just opened up. See if they're hitting the bid sequentially at lower prices. This, could be resistance. This could be passive. My gut tells me it's two-sided though, and not passive. It's just a little retracement down. They didn't continue hitting the bid yet. If they do, we'll have a good chance of getting stopped out here. Or at least reevaluating the situation. The support is right at 62. So when we get down there, I'll certainly be looking at volume. Instead of having my hard stop at 62.75, I know that 62.75 is a stop out area. And we'll look at the activity in the 62s and see if any cross trade comes in at the 62s. This is the first day that I'm actually using a 2-point stop instead of a 3-point stop. So it's sort of a new experience here. pause the video, let the market consolidate here a little bit. We're building a lot of cross trade here in the 64. It's just sitting here. Look at this, 11, 11, 2,000, 5,000, 1,800. Positive in the pullback column. These are all good signs in my opinion. If we break up here and get out of this 64, 65 area, I'm hesitant to sell our first contract at 66.50. Boy, it'd be nice to carry two contracts up into a short covering rally to that close up at 79 from, the other day from 2/4, February 4th. That closes in the 79s. That is tempting. Tempting, tempting, tempting. But first we have to break up out of this little area here. We're going to pull our standing order to sell one at 66.50 and try to analyze the data as we build it here. I'm going to pause the video. After having watched the consolidation here, all I can think now is that I'm right when I'm thinking there's a conversion taking place here on the volume at price, total volume. You can see that volume cluster building here. A lot of passive trade here. There's trade here. That's strange. Passive trade here. There are a lot of volume, just a lot of trade taking place in this area. We know that people that are looking at 5-day distributions, are over their limit, over their upper limit. So those responsive traders now wouldn't be engaging in this area. They would be engaging lower than this. They would be engaging once the market went back below its octane level, crossed the upper limit, back into its upper octane. They would initiate the short there with a rotation point of view back down toward the mean. That's why I think this whole area up here is two-sided trade. And if that's the case, boy, we might have a position that we can actually make some money on, because we haven't liquidated our first contract yet. And if we carry two contracts up to February 4th's close at 79, yes, 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 I'd be annotating my performance chart with some exclamation points. So we'll see here. We're going to stand by. And of course, if the opposite happens, I'm sure you'll be able to pick up a difference in our tone and in our speech. We are going to make another adjustment, considering that we've been in this two-sided trade in this tight range. We're not going to risk down to 62.75. We're going to risk down to my little mind speaking to me again, saying, don't change the stop, don't change the stop, keep the stop where it is. But my thought is, if we trade below this block, and hit 63.50, I think something's changed. Now the difference between 63.50 and 62.50 is 1.5 points carrying two contracts. So we're going to pause the video and think about that for a minute. Alright, we thought about it for a minute, and we're going to keep the stop right where it is so that we don't make a mistake and compromise, and this market comes down here and trades under it by 10 contracts, and we're stopped out. We're building big delta now, 19,000. This was 6,000 just a little while ago before this push up here was 12,000. Now it's almost 20,000. I don't know what to think besides the fact that this is just two-sided trade. We're building a lot of trade at the ask here, which is preventing us from going higher, as we're building a lot of trade at the bid, preventing us from going lower. So once we break out over this, once this two-sided trade equalizes, my gut tells me we're off to the races to fill that gap. Boy, look at that. That 6,000 was too much for the market to bear. Couldn't get over the 6,000. Now the question is, can it get below this 53, this 2,000, this 1,100, this 1,100? Remember, our entry is 64.75. With a 62.75 stop. Pause the video here. Boy, this is exciting to either get a big win or a small loss. Either way, they're teasing us here in the I period. We're about halfway through the I period. Yes, yes, they're initiating the bid here a little, or the ask a little bit. They're over the 65.50 area, and we are holding on to both contracts. We have moved our stop up to 63.50, which is the I period low. If it ticks one tick below the I period low, then we're going to get out with a small loss. And we're excited about this breaking up here. We're out of that trade at 63.50. Oh, what a shame. Golly, I thought we were going to punch out over 66.75. Now, what is this, a shakeout of the long, weak longs? This is similar to what happened yesterday. Once we couldn't get past that double top, the periods went all the way to the other end of balance. So we'll produce this snippet and take a look